Well, suffice to say that the market is not going down further, but at the same time, it's not bouncing from current levels. So really, it should close somewhere around 6,000 unless of course there's a big change in last half an hour of trade. Ramdeo Agrawal now joins in from Motilal Oswal Securities. Ramdeo, hi, afternoon. Are you surprised by this sudden fall in market today? Because for last 1 month, the trend has been that any weakness in the market was used as an opportunity to buy. So in that context, are you surprised by today's big fall?
It's fallen by 200 points, isn't it?
It's 400 points now, Ramdeo, for the Sensex.
Okay, so yeah, I think it must. I was away into the meeting, so I have not seen it very in last 1 hour or so. So clearly, I mean, 400 points is surprising, but I think it has been it has moved quite significantly from what we saw 5,500 or something like that. So clearly, this was the upper end of the trading band, and a correction was due, but this kind of sudden correction is kind of not explained right now.
Ramdeo, hi, afternoon. We're sitting with a cut of around 5% in ITC. As a house, what is the call on ITC?
ITC is still, we have kept a positive tone. I mean, I think aggressive buying is not recommended, but clearly the outlook is positive for the company.
Ramdeo, what about Bharti Airtel, a stock that you have been bullish on in the past?
Yeah, so Bharti, we are clearly positive on their domestic operations because the industry itself is healing and the profitability is stabilizing. It's growing at a double digit. So clearly, domestic operation is not a problem, but we don't have a very clear view onto their overseas operations. But on the whole, I think they have seen the worst. Yeah.
Okay. It's getting extremely murky for the markets. We're at the low point of the day, and it's a sharp and sudden fall that we've seen actually for the Nifty in the past couple of minutes itself. So we're down around 412 points for the Sensex at this point in time, and the Nifty is currently sitting at the low point of the day at around 59.86. And to put things into perspective, Power Grid is the only gainer on the Nifty at this point, sitting with a gain of around 0.3%. It is broad-based selling pressure that we're seeing this afternoon. So if you want to pick up something like banks, we have IndusInd Bank, Kotak Mahindra, SBI, ICICI Bank, all of them showing cuts of anywhere between 2.5 to 3% Not to mention commodities. So we have the likes of Tata Steel, which is down around 4% KN India from the oil and gas space is showing a cut of around 3% and something like TCS, like we've mentioned before, along with Infosys as well as HCL Tech, all of them in the red this afternoon. So showing a cut of around 1% to 2% at this point. Volumes high at around 1.5 lakh crores. So we've done quite a bit in terms of participation as well, and the advanced decline ratio currently holding at around 1:3. Ramdeo, what would you attribute the sudden weakness to? Because we did get some amount of data points from the macro perspective earlier in the day. We had CPI, which actually was better than expectations at 9.3%, but then we had the trade deficit data, which was quite weak at around $17 billion for the month of April. Do you think that the concern on the current account deficit is back on the table, hence the RBI might not move, and then going by the commentary that they said that maybe there is a possibility of even tightening?
Yeah, I think the current account deficit problem is the number one problem right now, at least in my mind, and now it is corroborating by again April data, and rupee has already touched almost like a 55. So I think that's the concern, which is and whenever you see that rupee is going to depreciate meaningfully, if there is a fear of whether it depreciates or not, only time will tell, but if there is a fear that rupee might cross 55 and go to 56 or something, so the inflow might get deferred, or maybe some profit booking may come. So those kind of it must be because of that, because this data is pretty jerky, that current account deficit. In fact, most of the people were building in that because of sustained inflow, sustained buying, fall in the oil price, fall in the gold price, the number should have been somewhat better. But instead of that, it is actually worse. So I think it has come like a bit of a negative surprise.
Indeed, and Ramdeo, because part of that is because the gold imports have actually doubled. I mean, have gone up significantly despite the kind of fall. So quite clearly,
160%.
indeed. So quite clearly, there has been quite a bit of demand of gold, of physical gold in particular. But Ramdeo, just to shift focus to the other part of the market, which really has been quite strong, banking. Especially, with banks like SBI, which have been very strong up until now. How would you be placed on PSU banks after the kind of earnings that you have seen, and in particular stocks like SBI and Bank of Baroda?
So it's very, PSU bank as a whole, I mean, this is a large unpopular kind of category, and if you see the Dow components, I mean, in US, the best performing components are the US banks, and they were the worst hit in the 2008 crisis. So clearly, among the banks in India, they have the two classes. One is the private sector banks, which are doing very well. They are acting like, they are behaving like FMCG companies. And then you have the PSU banks, which are unpopular and beaten down, and they are suffering from all kinds of asset quality issues and those kind of issues. So if the economy turns around, the interest rates come down, credit cycle turns, I think the one disproportionate beneficiary will be PSU banks as a basket. But my sense is that still staying with the quality, because right now global turnaround in equity asset class is still kind of led by quality stocks, and in that PSU bank bucket, I would think that larger banks like SBI, your PNB, Bank of Baroda, I think they will score whenever the rally comes.
Ramdeo, we've benefited from a strong liquidity run that we've seen, especially in the month of April, May. Do you think that the FII inflow is possibly going to be sustainable, especially with the data points that Anuj just spoke about in terms of the commodity or the gold sensitivity to prices, where demand is actually increased or doubled as opposed to, us benefiting from the fall in commodity prices?
Yeah, I think this gold phenomena should be very temporary one, because one, it is coincided with the marriage season. Second, it gave rise to some kind of a speculative buying because of that sudden slump in the gold price. But Indian consumers will be surprised that gold prices are not determined by their buying or selling. It is a global phenomenon. If by chance the gold prices go down because dollar is strong or some other factor, then they have to take the loss. So if by chance gold goes below again 1400 or 1350 or whatever, my sense is that it may not, they may not come back to buy again. So I think the gold thing should not be repeated, and oil price benefit is very limited. So structural problem of current account deficit of 5.5% is not gone anywhere, and it will take a lot of time and a lot of effort by the government policies to correct it. But how FIs will behave because of this is moot point. But global liquidity is humongous. It is a very conducive time to get a lot of liquidity in India.
Indeed, but at this point in time, there seems to be genuine profit booking. In fact, we were talking about large cap index leading the decline, but look at the way mid cap index has fallen in the last 10 or 15 minutes of trade. The mid cap index is now down 150 points. That's almost 2%. So that no longer is outperforming the large caps in this fall. That is very disturbing for the bulls. The turnover, as Ikta mentioned just about 5 minutes back, at 1.5 lakh crores, it's already 1.6 lakh crores. So quite clearly, big selling over there. Raamdeo, since you spoke about the government policy and what it means going forward, a lot of people were positively surprised by Friday's move by oil marketing companies to announce the bunch diesel price hike of April and May in one go. As a house, what would be your call on some of these PSU names?
See, as far as this diesel price is concerned, I think what they have announced, there is no reason why there should be reversal in their complete price decontrol of diesel. The way petrol is working, I think diesel should be in the same boat after some time, whether because of the oil correction or their own price correction in terms of price rise in terms of monthly data point. So it's only a matter of time that oil, petrol and diesel both will be fully deregulated. And that I believe, even if it is whatever is the trouble in Delhi, we are going to go through, and this is one of the biggest reform we have been able to achieve. So I remain positive on to outlook for these companies, and the subsidy burden has significantly already come down on account of petrol diesel. I think they are looking at literally 25,000 crores only. I mean from 1,20,000 crores. So I think big things are happening, and it will take some time for people to realize that underlying value of oil marketing companies is significantly higher than what it is right now.
It's a bit inexplicable what sort of fall that we're seeing in the markets at this point in time. So down around 450 odd points for the Sensex. It seems completely disconcerting in terms of the sudden fall that we're seeing. So the Nifty is also showing a cut of around 132 odd points. 59.74 is currently where the Nifty is at. It's more about the frontliners as opposed to the mid-cap index, despite the fact that the mid-cap index is currently showing a downtake of around nearly 2% and it is broad-based selling pressure like we've mentioned. So the likes of ACC, Ambuja, Asian Paints, Axis Bank, Bajaj Auto, Bharti Airtel, BHEL, all of these stocks are showing cuts of anywhere between 3 to 4 odd %. Ramdeo, before we let you go, just a quick word on the political scenario in which we've been facing with regards to the coal scam, etc. Do you think that that is somewhat plaguing the markets in terms of the political uncertainty at all?
Politically, I think Thursday, Friday, last week we have already traded fully, and there is no further negative surprise onto that. But actually the developments in Pakistan is far more significant today, and a stable democratic government coming up there is positive for India, hopefully. And so I would think net political development between India and Pakistan is positive as of today. But I think current account deficit is a huge number, and that's one single thing which can distort the market, which can have a huge repercussion in terms of what will be the government policies in terms of export promotion, import substitution, or what is the outlook of how FIs they look at India in terms of remitting further money. So I think those are the uncertainties which are right now I think hurting the market most.
All right, Raamdeo, we'll let you go on that. Thanks a lot for taking time out and talking to us. That's the call from Ramdeo Agrawal. Quite clearly, the market is worried about that trade deficit data and what kind of an impact it will have on macros, because this whole rally was predicated on macros. Let's take a break on that note. Once we come back, we'll have the closing trades.